Gold. Sure, it's shiny and malleable and looks good hanging around your neck. But why is it such a hot commodity right now? It pays no dividends, generates no yield. And unlike other commodities like oil or gas, it doesn't get used up. That means its supply doesn't go down, even if demand drops. Not that that looks to be a problem right now. Gold's performance last year outpaced the S&P and the Dow. But can it last? On this episode, we look at the reasons for gold's rally and where it might go from here. It's what we do on Reuters Econ World. Every week, we pick a phrase or buzzword and go deep on the economic principles and ideas driving the biggest news around the world. So this week, gold. I'm your host, Carmel Crimmins, in Dublin. Gold's status as a symbol of wealth stretches back thousands of years. In fact, you can trace the development of money as we know it to gold coins first minted around 550 BC in a region now part of modern Turkey. In the 17th century, paper receipts for gold held in storage developed into paper currency in Europe. Goldsmiths became the first private bankers, and gold became the anchor of the international financial system. In some countries, a currency's value was pegged to gold, a monetary system known as the gold standard. The gold standard isn't used anymore. In 1971, Richard Nixon ended the dollar's peg to gold at $35 an ounce. That severed the international currency market's formal connection to gold. But the shiny metal hasn't lost its financial allure. In fact, it's on a tear right now. To find out why and where it might go from here, I have Veronica Brown, our Global Industry Editor for Metals and Mining, to talk through all things golden. Hey, Ronnie.
Hey, how are you?
I'm good. I've just realised, should I call you Veronica? I always just call you Ronnie. Ronnie.
Call me whatever you feel like. There are so many names, right? So Ronnie's fine.
Some of them we can't even repeat on this show.
There you go. You can't. You can't.
So gold.
Mm-hmm.
Talk us through this rally, up 27% last year. It hit a record of $2,790 an ounce in October. It's a far cry from the $35 an ounce and it was once pegged at back in 1971.
Absolutely. Absolutely. 2024 in particular, we saw lots of things going on and all of those things were beneficial towards the market, essentially. So it was a stunning rally in 2024. I think we saw record highs for 7 months out of 12.
Wow.
As you say, a 27% rally on the year. Was it the best performing commodity in 2024? No.
Who was that?
Cocoa.
Of course, chocolate.
An even more significant gain of more than 200%. But yeah, it seems as though for gold, it's been experiencing something of a perfect storm in all of the factors that would be bullish.
How does the current rally compare with previous price surges?
We've been debating whether that equates to what you might call a third age of gold, right?
Ooh, tell us about these ages of gold.
So in the 70s, you had a very strong oil price rally. You had inflationary risks going through the roof, inflation going through the roof.
Right.
Oil shortage, and it reverberated around the world. And reflecting that was the gold price. Because the gold price went up in tandem with what was going on. And so that's where, when people are talking very strongly about gold as a hedge against inflation, then sort of, if you think about the sort of time around the global financial crisis, just before that, you've got the emergence of China as a major buyer of commodities and producer of commodities as well.
Mm-hmm.
You also had all the different ways of being able to invest in gold, and new ways of investing in gold came into play. So gold exchange traded fund activity
right.
gave a wider pool of investment into gold. And central banks were active at that point as well. So that's another period where prices went up massively. What I'd say about 2024 that makes it feel really different is the intensity of the rally, right?
Right.
We saw successive record highs. It just smashed through all sorts of key milestone levels. The chart and data nerds would be studying intensively and saying, oh my God, if we've done that, then this is going to happen next. And the big milestone that people are looking at right now is $3,000 an ounce, which if I think about gold being at something like $267 when I first started reporting it, it's mind-boggling.
Yeah.
It really is mind-boggling.
So what's behind the rally?
I mean, it's a unique metal in that it's a commodity and it also has a status as a financial instrument. And that's really what's been going on here. You've got an interest rate backdrop that is now favourable. And then the other key thing that's been happening is central banks have really been very active. And then there's been geopolitical problems, which are widely recognized. We've got Israel-Gaza, you had Russia-Ukraine, there's the fear of China versus Taiwan, all sorts of issues that have popped up to just kind of keep that psychology of gold as a safe haven alive. But the basic financial factors have all been moving in the market's favor as well.
So let's break it down. Let's start with the interest rate. I mentioned in the introduction to this pod that gold doesn't have a yield. So falling interest rates reduce the cost of holding gold, like making it more attractive for investors. That has been a factor in this rally, right?
Absolutely, absolutely. So we saw, the main central bank that the gold market would be watching is obviously the Fed. They moved into monetary easing mode. And with the anticipation of rate cuts, and then when they actually arrived, those were all things that were signals for the market to pulse higher. But there have been other central banks that have been easing around the world as well, and all of that has an impact.
Right. But there is something. Is it fair to say there's something deeper going on as well? Because if we look back recently, real interest rates were very, very high during, say, 2022, as central banks around the world tried to deal with the legacy of COVID, the high inflation.
Yeah.
But gold prices didn't fall. Like, is something happening fundamentally in terms of demand in the gold market?
Well, there's a couple of things there. So one is the debate over gold as a hedge against inflation.
Mm-hmm.
And just to explain that briefly, people would have traditionally said that gold is a decent hedge against inflation and inflationary risks, because the fact is that if you measure an investment in gold over a very long period of time, you will have benefited substantially. It will have gone up substantially over that period of time. And when that happens, it tends to outperform inflation. Is it a hedge against inflation? What you can say is that the correlation between inflation and gold prices is not linear, right? So while you will see there's been an outperformance, you couldn't directly plot that against inflation rates,
right,
and rises and falls in inflation rates. You can say generally what's happened over time, and that's where that sort of attachment comes from. The other thing in terms of demand for gold is that you have central bank demand, which has been really, really strong. And you just referenced 2022. And one of the things that happened in that year was the Russian invasion of Ukraine and the sanctions and punitive actions that were taken against Moscow as a result of that. That was a huge wake-up call to lots of emerging market central banks. And it gave a real sort of pause to reassess what is risky and what isn't. And so the one thing that people happened on in terms of this is something that wouldn't be confiscated is gold holdings, right?
Right.
And relative to central banks elsewhere, a lot of the emerging market central banks could see that their holdings of gold were pretty low as a proportion of overall reserves. And so that's been a key factor in those central banks buying.
Yeah. But it's interesting, the idea of gold as being sort of politically neutral has been very important in the last few years, right? With the whole kind of, the use of financial sanctions has grown, as we've seen.
Yeah.
So it's made it a real kind of alluring feature of the gold market.
Absolutely. I mean, if you think back to when sanctions were first introduced against Russia in 2014, so this is prior to the Russia-Ukraine war, you could see the Russian central bank officials were looking at what happened to Libya, what happened to Iran, and as a result of that, they themselves started upping their official sector holdings of gold. And then you can see that other countries have looked at what's happened to Russia since then, and that's galvanized them as well. The 2008 financial crisis is another thing that galvanized central banks. So China in particular would look at the sheer mass of the volume of investment that they had in US assets, and they needed to find a way to hedge against that.
There's always been this psychological aspect to gold purchases, right? Like a fear of the future firing up demand.
Oh, absolutely. Absolutely. It's not just banks, it's individuals, it's all sorts of people. I think back then when I was reporting gold, those who were counting themselves as gold bulls widely expected people to call them crazy, right?
Yeah.
It would be the sort of, people would often talk about gold, guns, baked beans, that sort of thing with, somebody holed up in a bunker somewhere thinking that Armageddon's round the corner. And for that reason, we need to hold gold. So that's an extreme. But far beyond that and far outstripping all of that, you have a strong tradition for buying jewelry in countries like India. People will buy gold jewelry for their weddings, but also as an investment. So it can form part of a dowry for a bride. And it's the sort of thing that you can buy and hold on to. You can touch it, you can feel it. And if you enter troubled times, you can sell it.
So what has the gold rally meant for gold supply? Let's take a real-world look at Ghana. Protesters in the capital, Accra, demonstrate against illegal gold mining. The surge in price means wildcat gold mining, known locally as galamsey, is booming. Small-scale mines produced 1.2 million ounces of gold in the first 7 months of this year, more than in 2023 as a whole, giving an income to people like this miner.
Before I would start, in fact, now I was not having anything. So I make myself say, no, me to have to go inside and get something.
But also polluting waterways, forests and cocoa farms. One of the factors behind that surge in cocoa prices we mentioned at the start of the show. Here's Abubakar Sadiq, one of the anti-mining protesters.
Galamsey has to stop. All our water bodies have been polluted. For how long do you have to sit and be looking at all these politicians doing us like this? No, we can't. They say water is life. When water is life and our water bodies has been polluted, how can we live long? So what we are saying is that stop galamsey because we want to live long.
Ronnie, this isn't a new problem. I remember visiting an informal mining settlement in the Philippines back in 2007, and you had drainage from the mines coursing through the streets, containing cyanide and mercury.
It's extremely tricky. It's tricky for the mining companies and it's tricky for the governments as well.
Yeah.
I mean, and the thing is, every artisanal there are different terms for this, but every unofficial mining concession is different. There are concerns around different things for different projects.
Mm-hmm.
Safety is a huge issue, obviously. The use of child labour is a huge issue as well. And what happens to the output is another issue. It can be mixed in with the gold or metal, because it's not just gold, it's all sorts of metals. So unofficial output can end up being mixed in with official output. How do you decipher that?
Right.
And so there are lots of conversations around responsible sourcing. There are voluntary agreements in place with several companies in terms of that too. In some areas, there have been efforts to try and clean up the artisanal operation and try and make it resemble an official operation or try to envelope it in an official operation, but it is exceedingly difficult.
So if this is the third age of gold, what's different this time?
I think the intensity of central bank buying is what I would see as a key differentiator, right? We could see that the rally paused when China paused purchases. And then when they kicked off again, I think it was in October of this year, the market started to move up again and hit another record high at the end of October. So we can, and that's the thing that people are looking at in terms of the outlook. One thing to say is that some people would suggest that when a market runs up massively and it creates a head of steam, when the bubble bursts, so to speak, it can fall really hard.
Right.
And it can take a very long time for somebody who has invested towards the top of the market to see a realization of profits again. That's the risk that's attached to all financial markets.
On that cautious note, Ronnie, where might the market be headed?
So, I mean, we've got a perfect storm at the moment in terms of what's going on. And then that also informs the outlook as well. So we are heading rapidly towards Trump 2.0. That may lead to tariffs. It may lead to inflationary pressures. We don't know the full extent of the outline of policies that we'll see with a new Trump administration, but that is an area of uncertainty that would certainly feed bullish appetite for assets like gold. And what Trump does in terms of Russia versus Ukraine, what Trump does in relation to Israel and Israel's war in Gaza. All of those things will figure into what happens for the outlook. But overriding all of that at the moment is still probably the central bank purchases.
How did gold do during Trump 1.0? Not that it will dictate how it does in the next 4 years, of course.
Well, funnily enough, gold did extremely well under Trump's first term. I think you can, if you think back, there was quite a lot of uncertainty around a lot of things. And so gold prices went up over 50% during his period in office, his first period in office.
Wow.
However, I mean, if you take a little look at what happened with other presidents, one other one sticks out massively. Granted, it was over a 2-term period, but George W. Bush, we saw gold rise more than 200% during that period.
What?
I mean, I think one of the things we can absolutely pin that down to is 9/11 and all of the uncertainty that was unpacked over that.
Wow.
I mean, the other thing that you could say in terms of Trump 1.0 as well is that we did have COVID.
Right.
And, we essentially, the music stopped on the world economy, and that's going to have an impact, isn't it?
Everyone rushing into gold.
Yeah, all of this.
Yeah.
So it's all part of that.
So what are the forecasters saying?
Analysts are looking at a number of factors. They're looking at whether or not central banks will keep up the intensity of their official sector purchases. They're also looking at the US rate outlook. It seems as though expectations for more cuts have been pared back ever so slightly.
Right.
And they may be slower coming than originally anticipated. So that's a downside risk. The central bank buying, I think there was a survey recently where something like 89% of the banks surveyed, and I think there were over 60 central banks surveyed, expected or anticipated that official sector purchases would continue to rise.
Right.
No one expected them to fall.
Okay.
And then when we think about emerging market central banks versus the so-called development market central banks, emerging market holdings are significantly lower. And so in a bid to balance portfolios, you would expect that there would be more official sector purchases to achieve that aim.
Ronnie, thank you so much. Before I let you go, I've got to ask, a tough one for the metals editor. When it comes to jewellery, are you a gold or silver girl?
It's just gold every time. Looks better against my skin tone. That's all I can say.
It looks nice and it's going up in value. Well done, Ronnie.
Okay.
Thank you so much for your time.
You're welcome. You're welcome.
A big thank you to Ronnie and all the team covering mining and metals at Reuters. You can catch their work from all around the world on the Reuters app or Reuters.com. If you want to hear more about the cocoa market, check out a recent episode of Econ World hosted by my colleague, Christopher Walljasper. There's a link in today's show description. It's a new year, but we're bringing back some favourites from last year, including the newsletter that accompanies this show. It publishes every Thursday, and there's a link to the sign up for it on the description of today's show. As ever, if you've any thoughts on this episode or any of our other episodes, just reach out to me on LinkedIn. Sound design, music composition, and engineering on this episode was by Josh Summer. Our podcast team includes Kim Vinnell, Tara Oakes, Gail Issa, Sharon Reich-Garson, Jonah Green, Christopher Wall-Jasper, and David Spencer. Our executive producer is Leela de Kretzer. Remember, for all your daily news, check out our weekday show, Reuters World News. You can catch it on the Reuters app or wherever you listen to your podcasts.